All right, what's up, guys? Welcome to the video. As usual, I've been kind of recapping my read here on crude oil, as this is the market I have selected to really hone in on this year. We do look at the NASDAQ, the S&P, and gold as well, all of which we navigated fairly well today. The indices were really kind of range bound, but we had a great read on gold. And the indices being range bound just really kept us away from them, right? Like, if the price sucks, you got to be willing to not take the trade. All right, so let me run you through kind of how I handled crude today. You can see in the top left here, we are kind of descending here on this channel structure. We placed a lower high here, and then we ultimately flushed these lows, and we've been talking about 82.45 all morning. Currently, as I'm shooting this video, the low for the session is 82.45 and pushing through it as we speak. So placed a bunch of kind of lower highs here, right? Lower low, lower highs, and right here I really liked how price got kind of locked up at the VWAP, and I took this short. I felt really great about it. So there were some areas here where the sellers got absorbed. You can see I have them marked off on my chart. Those were areas that I started taking some profit as we re-entered this prior low here. And as you can see, we're putting in a newly appointed lower low. As you can see, we have a high, we have a low, we have a lower high, we have a lower low, we have a lower high, and now we're making a lower low. So as long as you're trading with the overall sequence of which the market's moving, you're going to have a much more enjoyable, profitable experience, okay? If you're trying to fight the trend, more often than not, you're going to end up just hurting yourself. And in doing that, guys, it's very infrequent that I take a counter trend trade. And I have to feel really, really confident that I have identified either a superior high or low in order to do that. This is not a very clean trending market to the downside where I was looking for momentum entries, right? I was looking for pullback entries because overall this is very, very choppy price action, and that happens, okay? So being able to identify where there's high probability areas where price is likely to turn around provides us with the opportunity of trying to stay with the trend, enter at a low risk, place a very tight stop, and if we're proven wrong, we just get out and we wait for things to kind of reset and provide clarity, right? This little area here trying to push back higher, we were fighting the VWAPs. I didn't feel very comfortable about that. When we did push up, we put in a lower high. We were not able to get through this area right here. This is right during the opening bell. We talked about this live. This wick of the 930 candle being a problem for crude, and in fact you can see we retested it and we have never come back to it for the balance of the session. We put in an impulse, a correction, an impulse. We broke these prior lows. So it is what it is, right? Like that is what it is. So this area here got violated. What was I basically looking for, right? I was looking at this low right here very specifically. I'll drop a line there so you can see it. I'm looking at this low right there to get short. We retest this low. We retest the VWAP. There's a ton of buying absorption that transpires here. We have a beautifully finished high, which is trapping all the buyers in the top of this second candle right here. And the market hasn't looked back. We took an impulse, shallow correction, respecting the rolling VWAP, and we just haven't looked back, hitting that 82.45 area that we talked about this morning, that this fell a little bit short of at 82.50. And that's it, right? Short, sweet, to the point. Make sure you get exactly what you want before you place a trade. Understand something. Trading to trade isn't trading. Trading with intention of fulfilling a thesis that you have provided for yourself is trading. Okay, it's very specific to I believe this is going to do it. This is all my supporting evidence. And now I'm ready to risk my hard-earned capital to see if I'm right. And if I'm proven wrong, where my analysis tells me I'm wrong, I'm going to exit the trade. That's it. Right? I know that sounds extraordinarily easy and it can be explained in 10 seconds, but it will take you 10 years to understand that. And it will just take time. And it will take practice. And that's why I am a huge proponent of proving yourself profitable in a paper or simulated style account until you have become a consistent trader, doubling that account, whatever you're going, however the method is that you're going to trade, that you employ that with great discipline and then move on to live money. Live money is going to bring a different element of existence, right? Like, it's harder. Okay, because now you're emotionally tied to live money. That's why practicing is so important. There's no professional that has the ability to earn millions of dollars a year that doesn't practice. And that goes for athletes, doctors, you name it. Okay, nobody is sticking a newbie doctor to do a heart transplant, right? And you don't want the newbie doctor to do a heart transplant. How many times has he watched a heart transplant? Okay. So I want you to watch the market with intention. I want you to keep a detailed note of your thought process. I use a very clean chart. Other than the drawing that I personally put on the chart or marking off where buyers and sellers are being absorbed, I have a reference chart. The reference chart is what I share with my clients because that's what I use to reference the 4 markets we look at: NASDAQ, S&P, crude oil, and gold. Right? I have order flow for each of them that is also displayed for them to look at and see, so that as I'm interpreting it, they are getting the opportunity to see exactly what I see. Right? Because that's the only way you grow as a trader, is watching somebody do the analysis, do the interpretation, provide the expectations, looking at the exact same chart that you're looking at, and then having the ability to say, okay, I can build a thesis around that I can support to employing the personal trader's trade plan. And if they feel there's conviction that it meets their needs and their risk management rules and all those things, then they can start to implement their trading and they can start to build their records and build their rapport and build their confidence in a paper simulated style account, and then continue to grow until they're comfortable enough to trade with live money. I'm not here to dictate to anybody when you should trade with live money, how much live money you should trade with. I'm simply here to share the analysis, the interpretation, and the expectations so that you can witness it transpire about understanding when and where the analysis is wrong and when and where the analysis is correct, when and where the risk becomes correct or where the risk becomes wrong. And that's the hardest part, guys. And that just takes years and years and years of staring at the computer screen and under live market conditions and having this full, complete understanding of price action, volume, and order flow. Right? It's going to take time. My goal is to help your time kind of advance, right? It should take you less time with the more experience that you have with somebody helping you analyze, interpret, and provide expectations for the market so that you can grow as a trader. It's that simple, right? It's that simple. So if you want to learn more about that, there's some links below. But yeah, guys, this was kind of my read on crude. It was a bumpy ride this morning. I don't like to trade bumpy rides. But we pulled back into this very specific level that I had my eye on. Also, we hit the VWAP right there. And we had a bunch of buyers getting absorbed and a really nice clean top here on this specific candle that printed at 12:30. And you can see we've sold off and really never looked back. Those are the trades I'm looking for. And if I'm wrong, my stop is right above where my analysis is proven wrong. So if I got short here and my stop is here, if I'm wrong, I'm out. If I'm right, I start taking profits very quickly. I start looking left, right? I start referring back to where were periods where absorption had occurred, and I need to now know that there's a chance that a reabsorption could occur there. And that's where I want to start focusing on prior highs, prior lows, prior areas of absorption where I can start taking my profits very quickly and moving my stop to break even or slightly into the profit. In fact, guys, once I tucked my stop over these two little candles here, I mean, you could see we kind of pulled back into them. We didn't violate them, and we just plummeted from there. So as quick as I was taking profits is as quick as I'm moving my stop to break even or into the profit slightly. If I'm wrong, great, I get stopped out with profit. If I'm right, I'm protected, I have no stress, and I just let the market do what I expect it to do. The simple fact that we had a high, a lower high, a low, and a lower low, I had great aspirations for a lower high being placed at the test of the low of the 1010 candle this morning. That's it. So I hope you guys have a good one. I'll see you in the next video. God bless.